Hello and good morning. This is Ed Kadashabe from Forex Insights SA. You're watching Traders Next Door, and this is the Daily Scoop. Today we're going to have the 60th inaugural elections in the US of A. You have former President Donald Trump going against current Vice President Kamala Harris, and we're going to break down what the possible scenarios of each of their victories are going to look like for the markets. So let's look at trade first. Now, both of these candidates have very different stances on trade. Under a second Donald Trump administration, we could see a renewed emphasis on tariffs and protectionist policies for the US of A. Trump has hinted that he is looking at raising tariffs specifically in China and for Chinese goods to as high as 60%. Now, historically, these tariffs have been very inflationary and have put massive pressure on American companies, and they've driven up the costs of goods and services, particularly for companies that have significant manufacturing and supply chains in China. And this could lead to a lot of volatility if he was to be re-elected. However, in contrast, Harris's admin would likely follow similar to what the current Biden era's policies have been and offer a more moderate trade stance. Now, Harris has not signaled any significant intentions to impose new tariffs, but would likely continue the existing ones. If we move over to corporate tax, if Donald Trump was to regain the White House, he has indicated that he would look to lower corporate tax to about 15%, down from the current 21%. Now, lower taxes on corporations could boost profits and improve investor sentiment. And this would likely drive up stocks and indices by quite a bit in the short term at the very least, likely into the long term as well. However, Harris, on the other hand, she has proposed raising corporate tax up to 28%, from 21 all the way up to 28. And analysts predict that this could lead to as much as a 5% reduction in corporate earnings, and this would weigh down stock prices, particularly in the sectors of tech and consumer goods, which are already feeling pressure from previous rate hikes. However, in the long term, we could see a rally of these companies, particularly the ones that focus on renewable energy, as she has shown a lot of support for renewable energy policies. So it would be a give and take as to what that would look like in the long term versus the short term. If you look at dollar strength in particular, under Trump proposed tariff increases, this could drive up inflation, which would lead to a slightly more hawkish sentiment from the Fed. And historically, this has raised the dollar's strength. A second victory for Trump and his reintroduction of his America First policies could reinforce the dollar, making it a little bit more attractive to foreign investment, particularly with the current uncertain geopolitical tensions that we have right now. Harris, conversely, would like to continue the current strategies and focus on more stable relationships with our trade partners. This would likely lead to a more gradual fiscal expansion, which would signal dollar weakness, at least initially, as the market would anticipate steady yet a lot less aggressive economic stance and expansion. So looking at the 2024 elections, it is pretty much anyone's race. Right now, there is a slight skew towards a Harris victory, but looking at some of the swing states, that skew also goes towards Donald Trump. So right now, it isn't very clear who is going to be ahead. It is going to be a volatile time in the market right now. If anyone is planning on trading towards New York session today, I would advise you to exercise a lot of caution. But regardless of whether Donald Trump or Harris wins, we are going to get a new sitting president for the next 4 years. And this is going to shape the landscape of the markets for the distant future. With Trump taking office again, this is likely to see a lot of volatility in the short term, but a potential for long-term dollar strength. While a Harris victory would see short-term dollar weakness, however, steady growth would be planned, especially in sectors that focus on green energy. So while the outcomes of this election are merely educated speculation based on what the candidate's current stances on policies have been, once the candidate is in office, we're likely going to gain some new insights as to what their actual stances are going to be and how that is going to predict forward. A new president for the next 4 years, things are likely going to be at least a little bit different, maybe less different if Harris is in charge versus Trump, but we are going to get a new landscape to work with. Now, the Fed has gone on record saying that they aren't too phased about who wins the election. They have made their plan and they're sticking to it. So the FOMC meeting that we're going to get on Thursday may or may not be affected by who wins the election in the interim, but it is going to play an impact on how the markets see what the Fed does and how everything is going to be interpreted. It's all about the market's sentiment on events, a little bit less on the events themselves. So it's going to be a very interesting time. On the 2G's channel, we're going to have a watch party from 12 o'clock, breaking down the elections as they come out and speculating as to what this is going to mean for the market. So be sure to tune in a little bit later. For that, it's going to be quite the interesting time and history is going to be made. I've been Ed Kadashabe. This has been Traders Next Door, and you have just heard the Daily Scoop.